Dividend investing in 2024. Is this where you should be investing in 2024? As if the recession is coming, absolutely time to start loading a boat, because the dividends are going to go up and up and up, because all the other stocks are going to crash to earth, all the growth stocks. So do you want to get in before it happens, or are you going to miss the boat? There could already be a rise in dividend investing there. That's what you got to continue to look at when you look at investing into dividend stocks. But there is an opportunity to get into some of the best companies in the world right here, right now, with dividend investing. In this video, we're going to look at what is dividend investing, which I have said before on the channel, but I'll do it again so everyone gets to understand. And we'll have a look at all these beautiful companies at absolute discount prices at the moment. It's a time to get in, once in a lifetime opportunity maybe, to get into stocks like Nike, Johnson & Johnson, the list goes on. Value stocks all over the place. Some of them might crash and burn. We're going to talk about all that in this video. Let's get to it. Dividend investing 2024. Let's get to it here at Barry Charles. Yes, what is a sweet, sweet dividend? Well, pretty much what a dividend is you as a stakeholder get a bit of the company's profits that they have not spent on returning it into their invested capital, so back into their company, and they've decided they've got nowhere else to put the money, so they're giving you a sweet dividend to keep you in the business. So some people absolutely love this, and this is what they do. Just thank you very much. But other people would argue that they could be using that money to grow the business more and more and more. So some companies do dividends very early on. They just decide that's the way they want to go. Maybe because their owners want to get some money return themselves. But most of the time, most of the dividend companies are very mature companies. They give you a dividend, and it doesn't necessarily have to be the strongest dividend, but they've given you consistent dividends over time. That's including Kimberly-Clark, Johnson & Johnson. These ones have done it for over 50 years. It's craziness what these companies do in terms of how much dividend growth they've given you over time, which, don't get it twisted, sometimes these stocks only go up 1 cent every year, something like that. That's just how they do it. But over time, it looks very, very good. But just a question mark whether the stock price has gone up high enough to worth where you've seen some stocks 5x just like that. So that's the question mark, but how many stocks 5x? There's heaps of them that go 100% minus as well. So there's a lot of things to consider. But in terms of a dividend stock, well, let's have a look at just a few stocks here. You've got Nike, Johnson & Johnson. There's so many. The question mark you have to worry about is a stock like Walgreens going to let go of the dividend. That's a question mark going forward with that company. If it's still going to be there from this time of the recording. They might have cut it already, because you're getting a sweet, sweet dividend, but can they afford it? Looking at some of the REITs out there, NLY, Stock NLA, Capital. So that's one company to look at that continues. I'm invested in this company, whether I stay long term or not. I'm not 100%. This stock continues to go down and down over time in terms of dividend growth. They take it off you. They had the reverse stock split, so that was the start, and it got worse, and then they cut the dividend again. The price just keeps going down and down and down. Now, is this a value trap? It could possibly be a value trap. So this is just something you learn along the time. So it's the time to sell out. I'm still liking the sweet dividend I'm getting, but there could be a chance that I could get out of the stock altogether if they continue to absolutely screw me on the dividend. So that's something you've got to look at. We come to like Johnson & Johnson's the opposite. They've given you every single year dividend growth for all of time. That's the stock you ideally want. The question mark is whether the growth is there. There's probably an argument. But company like Visa and MasterCard are a bit more growth oriented. So that's maybe where you could look to get something. But yes, in terms of dividend, why should you invest in a dividend? Why? Cash flow. That's as simple as that. Only reason you invest into dividends is to get a cash flow. If you think it's going to be a stock that's going to go from $100 to $1,000, 99.99% of the time, a dividend stock will never do that. Absolutely won't be a stock that goes flying a 10x. It's simple maths because they're giving out too much of their profits. The company is not growing as much as they used to. They just grow consistently year after year after year, might be 5%, something lower than 10%. So nothing growing out of this world. It's a nice solid company and people just buy and hold the stock for the rest of the time. Doesn't mean you always get it that way, but with dividends, you do not want to buy at the top most of the time because you can get screwed over. Maybe not over the long term, but there could be times when, so if the dividends are really, really rising up, I mean, it's the time to just hold on investing into dividend stocks. And better to look at the growth stocks as they really drop. That's the thing. They're always going through cycles. There's times when you can buy energy stocks and when they're down low, which they have been, but they've sort of risen up a little bit. I mean, so there's always opportunities in the market if you know where you're looking and where you're waiting for. But with dividends as well as the commodity stocks don't really fly to the moon. So if you want to do that, you've got to look at growth investing if you're wanting stocks to fly to the moon. But for dividend investing, it's about getting that sweet, sweet dividend so you can either reinvest into the same company, or if there's a beautiful opportunity to invest into a growth stock, then you can do that. Or if you're just wanting passive income to pay some of your bills, then you can use dividend investing in it. So how much money do you need? $1. Yes, $1 is all you need to start. Do I advise that? Hell no. To be fairly honest, in terms of dividends, if you want to really starting to see some sort of decent return, you probably have to have at least 100,000 in it. Now, some people say, what? Well, you got to start somewhere, so you got to start low and just keep building. But if you have a lot of capital, get as much in as possible to get that dividend. Because you'll get, well, if you go in the right companies where they have a bit of growth as well, it'll be better than sitting in the bank. So that's a question mark you've got to have. You just got, there's a few things with dividend investments. You've got to buy it at the right time. You don't want to buy them when they're super high. You want to buy when you get them on value. You don't have to have the lowest value, but if you just have it in a beautiful, in terms of its intrinsic value compared to where it's currently valued, if you get it at the right price, you should be pretty safe over the long run. So, but yeah, dividend investing, what's the best stock? Wow. Now, Apple has a dividend. Now, is that the stock you need to be in? Because they're going to continue to grow and grow and grow. Are they doing it, or are they going sideways? That's the question mark. You have to look even at Apple. Are they really growing? They're starting to go sideways. So they're probably one stock that might be a little bit different to the others, but Apple is certainly slowing down. Don't get it twisted, they really have slowing down. And a lot of the reason why is because they're so rich. When you're looking at a $3 trillion company, how many people have that sort of money to make a big change? So if you want the stock to go up 20%, 25% for a start, and it needs to get a $4 trillion, pretty much. That just shows you how much money needs to go into the stock for it to fly up that high. So dividend investing is very much one for passive income. It's not going to be your biggest earner, but in saying that, it's less risky generally. What's another thing that's not good for dividends? It can get cut at any time. For people like myself, got screwed over with Foot Locker, cutting their dividend, and then the price of the stock just continues to plank. Doesn't mean the stock won't turn it around, but when you were expecting a dividend and you didn't get it, sometimes when you chase that high yield, that's the risk you take and you can lose out. So I'm not saying I'm perfect. We all make mistakes, and if you learn from your mistakes, the better and better you'll get at investing. So in terms of dividend investing, how would I say if you want to start a portfolio? I'm a one with less stocks, so I believe you don't need as many stocks. I think you get it too strong. I think you could easily just go with 5 stocks, 20% in each one. Just say if you're aiming towards 100,000 for a start, and then from there just keep building up. Even if it's 10,000, you can go 2,000 in each one, but slowly get up to 20,000 in each one. That's where I'd go. And in terms of stocks, that's totally up to you, because we all have different feelings on stocks. different ideas of what we think of the future is going to be and all that. You can go on solid stocks. I mean, there's so many options for you in terms of dividend investing where you want to go. There is riskier ones with higher dividend yields, which can be good in the short term, but then you could lose it altogether in terms of value over time if the stock continues to collapse. But anyway, that's just a little bit on dividend investing and what you can do in terms of making money. Just what I didn't say, dividend yield. Where do you look for a dividend yield? Most of the solid companies are about 1 to 2%. Let's just be honest. They don't give you much of a dividend, but if you stay in the company 50, 60 years, they could, or if your cost price is very low, they could be like they could be a big one. Like Coca-Cola's been huge for Warren Buffett. That's a big example. If you brought it early enough, your dividend yield can fly to the moon if you just sit on it forever and just keep taking the dividend. So if you get stocks earlier on and they really do fly to the moon, you can really make some big money regardless of the stock price, because you just continue to get that dividend payment every quarter, depending on the stock. Can be every monthly, can be every 6 months, or even a yearly, depending on the company. Most do quarterly, but some are different. But yeah, just in terms of dividends, there's always risk. So the higher the dividend yield, most likely the company is struggling more, so you have to check if you think that's going to be right, if you think the company can withstand paying that dividend. So you got to look at payout ratio, folks. Payout ratio, anything over a 50, you should got to start getting worried, especially when it gets up to 70, 80, and then obviously if it's over 100%, like Shell was a few years ago, they had to cut their dividend because they couldn't afford it. So that's where you got to look at. So if you can get a company that's below 50% payout ratio, it's very good. The lower the better, but you might not get their higher dividend depending on what they're giving you. But it's all about accumulating wealth over time. So dividends can be a good way to get that passive income. It's probably not going to get you the richest quickest, but it's probably the less risky of the investing strategies out there, and you can make decent returns, better than the market because of the dividend. You might not get the best growth rate returns for some people, but you should do quite well with dividends if you buy them at the right price. But thank you so much for joining me here at Barry Charles. That's just a little talk into dividend investing and what you should do in 2024. Interesting, a lot of good bargain buys out there at the moment. They could be in for a resurgence of dividends. But anyway, thank you so much for joining me. Remember to like and subscribe to the channel, and have a great day out there.